Welcome back to our YouTube channel, where we demystify the world of investing and empower you to take control of your financial future. In today's video, we will be diving into the exciting world of stock market investing. Whether you're a complete beginner or looking to refresh your knowledge, this video will serve as your comprehensive guide to stock market investing. So, let's get started. Before we jump into the nitty-gritty of stock market investing, let's first understand what the stock market is. The stock market is a place where buyers and sellers come together to trade shares of publicly traded companies. It provides a platform for companies to raise capital by selling ownership stakes in the form of stocks, and for investors to buy and sell these stocks. Now, let's explore some of the key benefits of stock market investing. 1. Ownership in companies. By investing in stocks, you become a partial owner of the company. 1. This ownership entitles you to a share in the company's profits and potential future growth. 2. Potential for capital appreciation. Stocks have the potential to increase in value over time, allowing you to profit from the growth of the companies you invest in. 3. Dividend income. Many companies distribute a portion of their profits as dividends to their shareholders. 3. By investing in dividend-paying stocks, you can earn a regular income stream. 4. Diversification. The stock market offers a wide range of investment options across various sectors and industries. 4. By diversifying your portfolio, you can spread your risk and potentially enhance your returns. Now, let's delve into the different types of stocks you may encounter in the stock market. 1. Common stocks. Common stocks represent ownership in a company and provide voting rights to shareholders. 1. These stocks offer the potential for capital appreciation and dividends. 2. Preferred stocks. Preferred stocks have characteristics of both stocks and bonds. 2. They typically offer a fixed dividend payment and have a higher priority over common stocks when it comes to receiving dividends or assets in the event of liquidation. Selecting the right stocks is a critical part of stock market investing. Here are some factors to consider when evaluating stocks. 1. Company fundamentals. Assess the company's financial health, including revenue growth, profitability, and debt levels. 1. Look at its competitive advantage, management team, and long-term prospects. 2. Industry and market trends. Consider the industry in which the company operates and evaluate its growth potential. 2. Analyze market trends, technological advancements, and regulatory factors that may impact the company's performance. 3. Valuation. Determine whether the stock is undervalued, fairly valued, or overvalued. 3. Evaluate key valuation metrics such as price-to-earnings ratio, price-to-sales ratio, and dividend yield. 4. Risk profile. Assess the risk associated with the stock, including its volatility, sensitivity to market conditions, and potential regulatory or geopolitical risks. There are various investment strategies you can adopt when it comes to stock market investing. 1. Long-term investing. This strategy involves buying and holding stocks for an extended period, often years or even decades. 1. It aims to benefit from the compounding of returns over time. 2. Value investing. Value investors look for stocks they believe are undervalued by the market. 2. They seek out companies with strong fundamentals and buy shares at a discounted price. 3. Growth investing. Growth investors focus on companies that demonstrate high growth potential. 3. They invest in stocks of companies expected to experience significant revenue and earnings growth in the future. 4. Dividend investing. Dividend investors prioritize stocks that pay regular dividends. 4. They seek out companies with a history of increasing dividend payouts and aim to generate income from these dividends. Diversification is a crucial aspect of stock market investing. It involves spreading your investments across different stocks, sectors, and asset classes to reduce risk. By diversifying your portfolio, you can potentially protect yourself from significant losses if one investment underperforms. Monitoring your portfolio is essential for successful stock market investing. Regularly review your holdings, track company news, and stay informed about market trends. Adjust your portfolio as needed to align with your investment goals and market conditions. And that wraps up our comprehensive guide to stock market investing for beginners. We've covered the basics, benefits, types of stocks, how to select stocks, different investment strategies, the importance of diversification, and the need to monitor and adjust your portfolio. Remember, investing in the stock market requires patience, research, and a long-term perspective. If you found this video helpful, Please consider subscribing to our channel for more educational content on investing and personal finance. Don't forget to hit the notification bell to stay updated with our future releases. Thank you for watching, and until next time, happy investing.